This is Ryan, aka Kenner and Clark, and it is 12:35 p.m. on March 4th. So we're going to take a look at Bitcoin. We're going to take a look at a few alts, and we're going to do these weekly updates more frequently. I think that we're at a point where there's so many roadmaps now that everyone has a pretty good base to work off of, and I think it's more important now to actually just pump out charts where we go over setups more frequently, where we go over conditions more frequently. I think the weekly outlook is a good idea. Maybe we'll start doing that in more of a text format every Sunday. Keep it kind of brief. Again, the outlook is something that you can use as sort of a higher time frame map. But I think these videos are better if we update them more frequently, because obviously the market is changing on a day-to-day basis. And if you put out a weekly outlook, it could become obsolete in just a matter of hours, right? Anything in Bitcoin can happen. And obviously, I think I just said obviously twice in a row. I'm always catching myself on these things because after I realized that I say all right and okay a lot, I started paying a lot more attention to what else I might be repeating too often. So I'm going to say it again. Obviously, as we progress with BlockRoots, we're always trying to make sure that we're doing the right thing and the best thing possible. And it makes sense that time to time we realize that maybe one thing needs to be tinkered with, and we could do a little bit better here, and maybe reduce what we're doing over here a little bit more. And we're trying to always, make this platform as best as possible. So that's I probably could have said that in a much more simple manner, but that's what we're gonna do. We're gonna make more frequent updates, and we'll try to keep these kind of short. And yeah, hopefully this will be better for everybody. So we're gonna look at Bitcoin first. Okay, this is the king for good reason. Right now, not as moving with as much conviction, right? So it's not as convincing as far as what the near-term direction is. We do have, I'm just looking at this naked right away to point out some things based on higher time frame structure, okay? Because I think it's sometimes just good to go back to the drawing board and pay attention to what the higher time frame picture is telling us. So the higher time frame picture, obviously going into the halving, looking bullish, all right? This kind of sideways price action was to be expected. Sideways large range. It's easy to get very confident behind a move and then completely abandon all reason. But then when it comes down to it, when you're sitting at home late at night thinking to yourself, you're thinking, well, this thing was not just going to go to 21,000 in a matter of a month. All right, this blow off top kind of phase, this will likely happen again after this all-time high. All right, so what we'll likely do up to this all-time high is probably approach it at reasonable speed. I don't think that it's gonna, this is the move, this is at the end of a move, this is what happens. So this type of blow off top, this type of super exhaustive high volume top, that's what it is. It's a top. It's not, we're not going to get the move that makes this in the beginning that looks like this. All right, so rather the move that results in this in the beginning of the move, on the way there, it's not going to look like it. It's going to start accelerating likely as it reaches this top. But in between, it's completely reasonable to assume that price could literally do anything like this between then. All right, and each time this might look like, oh, the inevitable portion that's going to lead to the breakout, right? We could be fooled way more than just once or twice or three times. All right, so there we go. I think I just said all right 3 times in the last 10 seconds. So I'm hyped up on coffee. The thing that I want to point out, obviously, the thing that we've talked about plenty of times is the fact that, we joke around about this pattern, but all that aside, head and shoulders patterns, inverse head and shoulders patterns, they are recognized bottoming structures. All right, they are recognized bottoming structures, accumulation zones. And the only reason the patterns catch a bad rap is because people just apply them in any context. All right, they don't take consideration to what's going on in the environment or context at all, and they're just looking at a pattern and saying, oh, that's a bullish pattern, or that's a bearish pattern, nothing else. All right, but across all markets, across all asset classes, whether you're talking about stocks, commodities, whatever it is, more often than not, you do see this type of pattern in bottoming structures. All right, and it's for good reason. Just imagine the market, makes a top or makes a bottom. The first shoulder is usually the first shot. Okay, meaning this is the first heavy amount of selling, and then you have a capitulatory bottom where you just get a ton of selling, where for example, it looks like this on the higher time frame. Just imagine how this works, right? This is just essentially a swing failure pattern on the higher time frame, okay, with a slight right shoulder. Okay, so think about it like this. On the low time frame, what do we see normally when we see a dump? We see a dump and then a aha moment. Everything is cool. And then as you approach the low again, it's an oh crap moment. The roller coaster is still going down. And then you start to see an acceleration through that low. So this dump, okay, the dump that follows is always larger than the first heavy dump. Okay, you can always expect that there'll be an aftershock. So this is a very heavy dump. The next one is even worse, but this is capitulatory. So this is where people give up. All right, this is where finally people say, okay, I'm totally wrong. I just want to be out of this. They dump, and then this makes your bottom. Okay, so sometimes this will make just a V bottom like this, where you have a really quick reaction. Sometimes we'll have this inverse head and shoulders pattern. Sometimes this will just make an Adam and Eve, where this dump will result in something that's more sideways like that. All right, Adam and Eve being something like this. Okay, Adam and Eve. This is your V reversal, obviously. So on the low time frame, we look at this and we say, okay, usually a second dump comes. It results in a pattern like that. And then you have your bottom, and then you get something like this. It's a swing failure pattern. People buy the breakout of the high. Okay, the inverse head and shoulders pattern works roughly the same, where you initially have a very heavy dump. Okay, rather here, right here is this is a different sort of bottoming pattern. You can see that this is sort of like a inverse head and shoulders. It does have something that looks like a neckline, but this is a really deep right shoulder, or rather left shoulder. Okay, so no patterns are going to be perfect, right? They're not going to be textbook, but the idea is the same, right? So this pattern, first dump, market says, oh, okay, this is all good now, right? Instead, no, we're going through this low again. You go through that low again, and you create way more panic, because now everyone who thought that this would be a good inflection point, or this, now they're looking at this, and if this didn't hold up, then why should this, right? So if we thought that this was going to be the bottom right here, now we're approaching it again, then God, you know, we have way more in store for us. But instead, the market finds a base here, and then you get a really strong move up, all right? You get a strong move up, but there's always that sort of last sell-off point before a major markup, okay? So that usually results in your right shoulder. Okay, and the lack of follow through with the selling here, this is all just telling a story, right? The fact that this shoulder doesn't get as deep as this shoulder, ideally, right? So it should look something like this. The fact that this shoulder doesn't ever come as deep as this one, it can, but we don't want to see that, because that tells a story. It says that there's a lot of people interested in selling, coming from left to right, and towards the right side of this pattern over a long period of time, we see that buyers are stepping up, and there's really less sellers on this at this point. So we're seeing less selling activity. There ideally would be less people in the market willing to sell, or they're there to sell in general, all right? Because at this point, there's less supply. So this is how the pattern works over a higher time frame, and these are the same types of patterns that we see on low time frames, right? If we're talking about low time frame structure, we see something like this. Let's say that we see this at the bottom of a move. This is what we talk about when we're talking about looking at strength within microstructure. Okay, this just, even on a 5-minute time frame, looks like an inverse head and shoulders. Okay, because it tells a story. Selling, selling, less selling, more buying. Okay, now we've managed to completely change control from left to right. Sellers are control, now buyers are control, because they're unable to make price make a newer low. All right, low, lower low, higher low, higher low. So try to keep things as simple as possible. So this is what we're looking at right now, and it should come of no surprise. That's my point. It should come of no surprise. It's really nice to get really bullish, but when you lose market structure like this, you have to look to the next immediate areas, and without even putting on TPO charts or volume profile charts, you could just use your untrained eye, all right, or trained eye. I don't know what the saying is. Okay, immediately the areas that are going to come to mind, if you have any idea of how market structure works, you're going to look at the swing high, swing low, swing high, okay, floor most recently, swing low, and then high over here. And if you want, you could always point these out further and see where they extended to previously. And when you do that, you'll see that these were significant previously. All right, all of these. So market structure tends to maintain its importance from left to right for quite some time. We're all trading a technical asset. We're all kind of looking at the same areas. It should be no surprise that that happens. Now, looking at this on the lower time frame, I hope I didn't lose anybody because I'm talking a little fast. I said I think I said in this one I had a cup of coffee. I read this video twice before because I got 2 phone calls from my wife. So I am actually on my 3rd cup of coffee. And looking at this right now, all right, obviously the area I mentioned yesterday in the YouTube video, that is the most important area for me as far as being a bull. Being a hardcore bull, I need to see that this area is broken and held with conviction before I could assume putting on any longer term, higher time frame position trades is a good idea. And by that I mean, when I say put on trades, I'm always long spot Bitcoin, because I got in at such a good price that I'm always long spot Bitcoin. Sometimes I'll hedge a good amount, but when I talk about a key area of market structure where I am very bullish, that means where I'm probably going to put on longer term swing trades with leverage. All right, where I'm going to increase my exposure, and ultimately, yeah, I'll be increasing my risk. But you figure that after you've done something long enough and you've gotten pretty proficient at it, you can increase your exposure and increase your risk. All right, a lot of professional traders end up changing the amount of risk that they're taking based on how they're performing or what type of particular setup that they're trading and what type of conditions that they're trading, and judging how Bitcoin is whenever it has a major correction and then regains that area that it has lost for quite some time. It tends to have a lot of follow through. So if we spend a good amount of time moving sideways here, which I anticipate rather, I think that if we make our way back above this area, it's a good meaty trade, at least from 9,500 to, I'd say, 10,600 area. All right, and I'd be willing to put on a pretty big position there. But until then, okay, that is likely going to be our ceiling that we're going to need to deal with. And I think that what we're doing right now is we're probably building some type of range. And all this can change in a matter of hours, right? That's why it's going to be really good to do a video in another 2 days. So this is the next area of importance down here. All right, and again, this lines up with my TPO structures that I've labeled. Okay, but so far, these are our lows, okay, and these are equal highs. Okay, so equal highs up here. And then when you're looking at this, I actually have to get rid of that drawing because this is a drawing software platform. Or rather, I'll just use there we go. So you know what we'll do? We'll go to a different Bitcoin chart so that I could draw on a fresh chart without changing my other ones. Okay, 1 second. They need better hotkeys for the drawings on TradingView. Why do I have I don't need I don't know what this is. What is this crap? Oh, there we go. I have a line drawn there. So I'll just use this one and move it up. All right, so we can see that this sort of looks like a range right here, right? You have equal highs, and then without even checking, I bet that this is probably the 50 point right here. All right, so right here. So let's take out the fib. So yep, that's the 50 point of this range. So if you're just trading this based on it being a range, we're at the midpoint of the range right now. All right, and this is an opportunity to take trades off of the exteriors of this range. All right, we've obviously spent more time on the lower portion of this range than on the higher portion of this range. Okay, so what we're looking for right now is strength to be maintained right here. Okay, if you get something like this, all right, I don't advise taking trades off the middle of a range, but there are so many opportunities to take, and it's one thing for me to say that there's a risk in taking a trade off the middle, and we shouldn't get in a habit of doing it. And then it's another thing to say that this is never an area that I take a trade off of, because it's not true that I never take a trade off the middle of a range. I try to stick to strict rules, but depending on what the conditions are, I might adapt. And ultimately, if we are moving back above, so if we just look at this as market structure right now, making a series of lows and highs, if we put in something like this where we're back above 8,800, well then in 8,900, 50, 9,000 sort of trade kind of presents itself, all right, because you're thinking, all right, well, likely at this point going to come and retest the high, okay, because at this point we still have not taken the highs. So we still have not taken the highs. This high over here is actually, I think it's $3 below this high over here. All right, so let's actually just check. See, there we go. I think I said actually back to back, too close to each other. All right, so this high is 8,972, and this high is 8,900 and no, that's not right. Let's do that again. So this high is 8,972, and this high is 8,900. Ah, it did take it by $1. What's going on? I didn't think that was right. How come it showed up differently on a different chart? Did we take it already? I guess we did. We already took the high. All right, scratch what I just said. I thought we were $1 below it, but I guess that was wrong. So we took the high. No real major rejection though. I mean, we're maintaining the midpoint of the structure. I don't see any reason why you still can't take trades off the top side of this range. All right, so highs and lows of this range still presenting trading opportunities. Okay, we did take the low over here, so you can see that this represented that swing failure pattern that we talked about when we talked about dumping below 8,500 again. But still, there's plenty of trades to be presented within this range. You're still going to be looking for these types of setups, right? Ideally, we're going to have something where if you lose the midpoint of this range, all right, you'll likely come down and test the next clustered area before you bounce. All right, take out a low, and then we would want to see that price closed back within this range before taking a trade to the mid. So price makes a move below the range, violently is rejected. Okay, and again, we want to see the signs of that aggressive selling at the lows, and then you have these opportunities to fade the highs and the lows of the range back to the midpoint. Okay, if you're taking a short off the highs or a long off the lows, you don't want to obviously take it all the way to the high and consider that that's the move you're going to get. You have to think immediately the first sticky area from any one of these points is going to be the midpoint of the range again. So if you're taking a trade off the low of the range, your target is the mid. If you're taking it off the high, your target is the mid again. Okay, obviously, depending on how you're coming into it, you might have a little bit more certainty about taking a longer term trade, maybe from edge to edge, but that requires a little bit of discretion, and not everyone might be there yet. So looking at this on a 4-hour time frame, this is giving us that setup that I talked about for the long. Okay, the problem with this pattern that I noticed was that there was a lot of aggressive selling at the base. So if I just open up Sierra right now, so there was a lot of aggressive selling at these lows, but there also was a lot of aggressive buying as well. So let me just boost this up for a second. So see down at these lows, there's a lot of aggressive selling. You see that a lot of these are just red below this area. So what you're looking at is down here. The red indicates that there's more sellers in each of these. So it's colored based on which side was dominant. So more sellers than buyers, but it's not such that there are multiples in difference. So, excuse me, I'm having like the hiccup burps as I'm trying to talk. So it's not like there are multiples of a difference. So it's not like on the right-hand side, the buying activity is way lower than the selling activity. If anything, both sides are getting aggressive at these lows, all right, which shows that the market is kind of fighting this out. And this is an area where sometimes it's actually good to sit instead of getting overcommitted early, because again, there's no real sign that one side is really offsides. All right. At this point, when sellers are overselling down here and we're back up here, well, then buyers are in a bit more control. But then you have the same thing that happened at the high. You have buyers that got aggressive over here. You had sellers that got aggressive too. But again, you're back to the middle of the range. It's kind of an equal fight right now. Let's look at, I want to see that again, see the top side of the range. So again, yeah, there's aggressive buying over here, but it's not that much of a difference in terms of the aggressive selling compared to it. Okay, this is on a 4-hour chart though, so I wouldn't necessarily trade off of finding trap sellers or buyers on this chart. I'd be using something like a lower time frame or a point figure, or again, periodicity that isn't based on time. So this right here, this is a point figure chart. Okay, so this requires price to move a certain amount before it registers a new candle. All right, so we have these different periodicity videos on the roadmaps if anyone has any questions about these. So right now we do have this setup though that I mentioned where I said that I wanted to see price come back down and revisit this area. So if we're just looking at how this appears right now from low, high, low, high, low, now we have a high, so a new high now. All right, and we're testing the midpoint of the structure. Ideally what you would want to see, and I think that, and I should probably just say what I think right now. I think that we're likely within this area 9160, which is a naked point of control we have yet to test. All right, from right here. Okay, from here to here, I think represent our long take profit opportunities. So if now we start doing something like, and I guess I have to qualify this first. So here we have a range, right? And I was just telling you that you could take trades off of the exteriors of this range. So you can fade this if you want, all right? Or if you're bullish, this looks like a potential long opportunity. Okay, you might get an initial rejection off of this, but what we have to think of is what is the probability now that after, this is not exactly a very clean range, so it's not like we splashed, all right, like this, and have been making a range like that. All right. Instead, we've heavily moved towards the bottom more than the top, and now we're favoring the top. All right. We have not come down for another rotation down here. So it's not like we've done this, okay, to really validate the idea that this might be a really strong sell compared to where we really sit right now, which is on the midpoint of the range, and this might be an opportunity to early buy. All right, so if anything, I think that that's the case. I don't think that this is much of a favorable opportunity up here if we approach it again now that we didn't rotate back down towards the low. And I'm glad I clarified that, because I did say before that you fade the exteriors of a range if you're trading a range, but you have to take into consideration what's going on right now, where we currently sit in market structure, the fact that we favored the lows more so far, and now we are maintaining structure in the midpoint instead of coming back down. So what I'd be looking for is, we're looking at a 4-hour chart right now. Just zoom out really quick. Whoops, hold on. Oh, I have it set right. Okay, clean that up. So ideally, you would want to see that this pattern of market structure is changing to really put anything behind the idea that this is a good long opportunity. Again, this first sticky area, so from 8,900, all right, 8,900, the top of this, okay, to 9160 initially, but then I'd say the low of this area over here is a good opportunity, all right, to fully take profit. All right, so you're looking at 93, 95, okay. You're not going to pick an exact point and say 95 when you have some idea, rather when you have some indication that before there might be some trouble. Okay, looking at this structure back here, okay, just extending that forward, anywhere between here we could see price turn. So this is going to be a judgment call on how much you want to keep on at this point, how far you want to try to take this, but I would say that my overall opinion is that price is going to, if it moves up, it's going to come back down either way. So even if this setup does work, where we have this being retested now, and if you want a bit more certainty, this is your certainty. When you have a swing failure pattern on the daily, all right, or instead of coming down, so this is a swing failure where you break the low, all right, and then so is this failure swing as well. So instead of making a new low, you make a higher low, and then the trade is a break of this high. So some of you might be better off waiting for a break of, again, this high over here, which sets up to be under 89.63. All right, and that puts us at, where does that put us at? Right around 89.50, I'd say. So a break of 89.50 probably leads to a test of right over here, the lows of this previous structure. 9,500, I would say max. I could be completely wrong, right? We could 9,300, 9,500. The idea is you're testing these lows, and I think that after that we end up coming more than likely back down. So I don't think we do this. All right, I think if anything, we do something like this, and then come back down to the midpoint of this range. Ideally, if we came up here and we rejected up here, let me get a better chart setting so it's a little bit more obvious as to where these levels are. So, or I'll just go back to my other chart. There we go. See, that's why I leave this chart. I don't need to do all that. All right, so ideally this trade would be set up if we broke this high and we're back above this week's point of control, the first sticky area here again. And then more than likely the turning point is up here at the lows of this structure. Or you might see some resistance before then around 93, but ultimately I would say price could come up to 95 before resolving lower again. And if anything, the extreme bullish case, not the extreme bullish case, but a really bullish case would be, it sounds like I said cache, would be if this was maintained. So if this is your range and we broke out of it, okay, so break above 89 and came up here, it would be really bullish if price formed a base right here now. All right, because that makes it look even more obvious that this is some type of bottoming pattern, all right, for this structure, right? So if you just look at previous price action, you see how this played out. Okay, there are other times where this has played out. Right, so for example, price comes down and bottoms over here. Spread this out a little bit. Just the idea of reclaiming structure. Just indicate this. So here's a range that we were in. This is a very different one, right? There's a lot more aggressive selling at these lows. There was a lot of aggressive selling. Each time that this low was tested, it looked like it was going to completely crap out, right? But each time it held and it actually started making higher lows. But it was really bullish when it did this. When after breaking above this range, whether you want to go by wicks or by candles, when after breaking above and out, came off of a higher low and then retested the top side of this range. All right, so you're just looking at this, right? It's just basic market structure stuff. So broke out, retested the top side. So that would be really bullish if we did that from where we currently sit. I don't necessarily think that that's going to be the case, but it doesn't really make sense for me to say that because Bitcoin does things all the time that are not necessarily normal. So that's what we're looking at. All right, if you're looking at this range right now, you could take something like this, fixed range, and you'll see that this is more or less looking like a balanced composite right now. So it's semi-balanced looking. It looks like that structure that we referred to as a normal deviation, all right, where it's pretty balanced. Here's your value area low, okay, right around 8,600, and value area high is again right around 8,880, 89. And with conviction, you could say that if you gain acceptance above 8,850, all right, you're above the value area, and gaining acceptance with volume and new buying pressure coming in here, so an increase in delta, would really set this entire trade up. So some people they're more convinced when they get, so this is the thing. Obviously, when I'm telling you what I'm thinking, I'm telling you what you can use based on if you're just trading price action, if you're just trading based on actual physical swing highs and swing lows, so exactly where we came off of. But everyone knows now that I use the profiles a lot. So if we get a move above here, where we are obviously now already above here if we're up here, then there's way more weight behind this. If we gain acceptance above 8850, all right, 8850, 8900, 89 if you want to be safe, because this is again our volume profile and this is our value area, and it's not like this is just a value area for just one day. All right, this is a value area for from the 26th to where we currently sit right now, which is going into the 5th, and tomorrow's my birthday. So hopefully it makes it for an important birthday celebration that I could get good long on this. And if you want to look at this right now, you'll see that this is the daily profile, daily TPO chart for Bitcoin. All right, you see that right now below us we have a naked point of control. This is what I meant when I said naked. Okay, this is the other naked one I'm referring to. It has not been touched yet. So you can see that they're interrupted and touched, and they don't continue when we have a day that comes into contact with one. But they keep continuing until they're touched. So it's just good to point out because these represent areas where you could potentially find some type of stickiness. So if we combine all these, we'll get the same thing I just showed you on TradingView. All right. So this is our composite, and this leaves us with what we were just talking about, this 8850 area, 8880, all right, and then 8600, and these are your value area high, value area low. Here's your point of control where we're sitting for most of the time, the midpoint of the range, and what you would look for is, again, acceptance above this, all right, acceptance above 8800, 8850, 89, all right, leads you to their first sticky area, which is 9160, and then probably to the bottom of this, 9300 is a given. After a break of that, I'd be paying attention to how price responds up here. If it's heavily rejected up here, then that's one thing. If we're kind of just making a base up here, then it's probably going to 9300. All right. If you see an immediate rejection over here, then you'll probably get something like this, where you come into it, you're heavily rejected, price makes a second attempt, and either then you could take profit, or if you want to let it ride, that's up to you. But this is just using the composite. There's really no clear sign in terms of delta right now as far as divergences go. Looking at this, and again now, so ExoCharts has all this, Trading Light has this, Tensor Charts has this tool. So this again is that CVD that I always use, and there was no really clear sign except for right here that this was overbought compared to CVD. So high, a lower high, but on CVD, you can see we made a higher high, right, or almost equal highs at this point. So a lot of buying pressure, but really no follow through whatsoever. Again, there's really no clear indication right now, though, that we have any major divergence. All right, so let's look at this on a higher time frame chart, see if we see anything else. Just in terms of, if you're looking at delta on a higher time frame setting, this is where you could begin to pick up whether or not delta is really supporting the trend or if it's beginning to taper off. All right, now these divergences are not always that actionable, so it's not like if you see delta not following price as violently, it might mean that the trend is going to end. It doesn't necessarily work that way. Okay, you could have lower liquidity where for less buying, price is still moving further. That might actually be an indication of maybe that there might be a turning point at that point. Okay, when you have less liquidity and price is still spurting up, because you're not really maintaining any book support likely, but get into that separately. So no real clear signs right now. All right, you did see that the delta began to shift. Just an example of what I mentioned in that in the quiz answer. All right, over here. All right, so this high to this high. So you can see price makes a high that is closer to this structure, but this delta right here, there's a much bigger difference. All right, obviously this includes all this aggressive selling, but you see that delta begins to taper off with a trend. So if delta does something like this, all right, and let's just say that this was a better drawing. Let's redo that actually. So here's your trend. Say you're looking at this on the 4-hour, and then delta does something like this. Okay, these two highs being different, that might be an indication that the buying power is beginning to dry up. All right, so I think that covers it for Bitcoin. Okay, just to clear this really quick, looking at it on, where are you? What is my red list? Those are some of the alts. Okay, so the fixed range profile, just to show you that again. Okay, so there you have it. So again, if you want to use this tool, all right, a break below 8,600. Again, this range is not as pretty of a range to actually fade. As I said, as I corrected with the highs, not maybe a fade-worthy high, and maybe the fact that we've favored the bottom at this point, not maybe a fade-worthy low. Okay, considering the market is starting to flatten out right here, I think that the next direction that it does pick will probably have some follow-through. All right, so either lower, and if it moves lower, all right, it is probably going to come down right here. 8,200, 8,100 area. All right, I'd be looking for opportunities in that area. If it doesn't even make it down there, though, that's a really good sign. So let's say that, again, I'm covering a few things in this. Hope I'm keeping everyone's attention. So let's say that this structure follows like this. So breaks down, okay, breaks down here, comes down to 8,100 area, and then comes back up within here. Okay, that's a very good sign. All right, that coupled with that sign of maybe aggressive selling through this low and then getting back above it, well, that says that, well, if you sold over here so much, price shouldn't be back up here, right? All right, especially after we already put in this sideways structure, lost the low, and now we're back up in here. Well, then you're at least looking, if you're back up within this range after selling the low, so breaking this, break down, and then you're back between this low and you're putting in strong market structure, well, then you're probably looking at least back up here, right? So outside of this range, break through, okay, back within, retesting this low side, you're probably coming at least back up to here, and if at that point, you're definitely coming back up here. And I actually don't know why I just said definitely, because I hate to use that word. But this just shows you that for all the selling, okay, that this might have been the final blow, and maybe then we're putting in some type of inverse head and shoulders on this time frame, okay, where you have something like this, right, neckline, and the idea is still the same, right? The market came through a previous low, gained a lot more support in terms of selling, okay, it gained a lot more support, it gained a lot more attention and created more participation in selling because you broke a prior low, and now it's back up here. What's it doing back up here? Well, it's probably a lot stronger than you think. So let's look at some alts really quick. All right, algo. Okay, again, when we did that weekly outlook, we said that the high of this range would be worth buying. Okay, so the retest of the high of a range is always worth buying, especially when it's a high time frame range you're stuck within. So looking at this structure right here, Okay, anything into these lows as a first test is more 99% of the time is going to yield quite a return. All right, especially after you make a really bullish move outside of a range, the retest, the first retest, the second retest, you're typically going to see that people are going to step in behind this. All right, it's always a matter of, though, how deep is it going to retest? Because if you enter in here and it comes down here, how willing are you to stay in this? You might be scared out of it, but I'd say that more often than not, some of these alt trades are worth stepping away from, putting on your target, putting on your take profit, stepping away from it, putting your stop deep in the structure, and realizing that sometimes it is a gamble, but 90% of the time these technical levels will work. And that could be complete bullshit by saying 90% of the time, but you're going to be looking at the chart anyway. Unless it loses a major area and falls back within the range, it can move along the top side of that structure for a week and then pop up 50%. And you've all seen that happen before. You've probably exited an alt and thought, fuck, I should have stayed in it. So ETH. Now ETH is starting to look weak against Bitcoin. All right. And this is one of the more ominous signs, I think. I think that ETH sometimes does carry the market, or it is sometimes the leading indicator. Again, ETH being something that is connected to a lot of other protocols. And some people are just fan favorites of ETH to begin with. ETH is it is the second largest asset compared to Bitcoin. I think it's still that. I hope it's not XRP. Let's check. Coin market cap. Yes, of course it's ETH. What was I thinking? So this right now is beginning to look weak. All right. If you just look at how it has responded the last few days, and now it's staying at the low of this range. All right. The strength would be if we came back above here, right? If we see that this comes back above here, well, then maybe it's also a good reason to get behind Bitcoin. But this might be another reason why we should maybe stay on the sidelines with Bitcoin and not get in position right now until we get one of those breaks I mentioned, because ETH is looking, and this is why you don't get prematurely long, in Bitcoin until those levels are met. ETH is looking kind of weak, and if ETH breaks, I think it might be a good indication of where the market is going, right? So ETH looking kind of weak right now. If ETH does break, I think that ETH is going to come back down to the top side of this range, all right, eventually. So down to 2,300 sats. And if we're looking at this on a USD chart, I would be looking right here initially. So 200, this 200 zone, all right, might get front run. So if you're taking profit at 200, consider that how even numbers technically, even though I don't like to take profit at even numbers or put stops at even numbers. All right, I'd rather front run this if I'm looking to take profit and capture a bounce. But I still think ETH is going to pass through 200 eventually. I'm just talking about taking the first bounce. If you're longing or if you're shorted and that's your target. Okay, damn Link. I shorted this the other day a few times, and every single time I came out on top, which I'm happy about. But I'm really happy that I wasn't stupid enough and blind enough to consider keeping this short on, because I'd be stopped out. Link is just a leader right now, so it doesn't make sense to short Link until it gives you the biggest sign that it can that market structure has broken, and that means you need a lot of confirmation to short this. All right, so you need a lot of confirmation, just like over here. So over here you had an initial top, and then this looked like a top, and then this looked like a top, and then finally you put in a top. But at that point, I still wouldn't have tried to short this, because at any point, this could have just this had been showing multiple times that it just was unwilling to sell off, and finally you lose major market structure, and then you start to see a shift. So Link, I wouldn't really short again at this point. I can't say that because I might end up shorting it in between, but I wouldn't really short it again until I'm back under this area. So under this low, back under here, and then seeing that there's a failure retest just like this. All right, at that point, at least I'd be able to define my risk around this structure. At least I could take a short on this retest, maybe even blindly take that short on that retest, put my stop up here, and target at least this first cluster high over here. All right. I'm only really excited about shorting Link, Tezos, and things like that, because now I'm trading on Phemex, and my geographic limitations. When it comes to Tezos, I was not able to trade Tezos really on anything, and I wasn't willing to put any of my money onto some of the alt exchanges that might be popular, but I just don't trust them. So now that I'm trading on Phemex, and they don't offer Tezos spot obviously, but I could trade it still, and I could trade it on leverage. I could do whatever I want with it, and Not do whatever I want with it, you know what I mean. I could trade it directionally. Litecoin, all these I think are gonna, a lot of these alts I think are just gonna make new lows, honestly. And repeat this pattern over and over again. Tezos looking strong again. And this is one of those bottoming patterns I was talking about, right? The idea is sold off, market unable to sell lower at this point, and now you are putting in bullish market structure. So if we can, so this low is obviously lower, not the strongest looking right there, but now you have a very clearly defined high, and your lows are getting increasingly higher. So if we break this high, all right, if we break 3,400 sats, I'd say that we're coming at least up to test this high again, right around 4,000 sats. All right, Tezos is really strong, and again, I was just shorting that, just having fun. It gave an opportunity. I got out. I got out at a loss, so not that fun, but nevertheless not that bad. I didn't let it hit my stop. I think I actually pulled it 3 cents before my stop, so not all that bad. Took a haircut, but nothing terrible. Ox. Okay, this is a good retest of the midpoint of this range, all right, which was prior low. So if you're just looking at this, for example, and you're considering that this is a low of the range, this is a 50 point between this low and this high, right? We'll make that a little bit clearer instead of using those other drawing tools. So from here to here, actually comes down to the 0.6, depending on whether you're Wix or it's still the same, 0.6. But again, this was, get rid of that. This was the area where we've had the last cluster, this low, extending this all the way back. Just an important area of market structure. Okay, again, it's more or less a midpoint, but whoever took this is taking the trade off of these lows. All right, and again, if you just extend these back, you see how those lows lined up with previous area or previous areas. All right, so this is the same, you know, when we look, I bet if I look at this on a volume profile, I don't know how much I would want to bet, but that might be the point of, this might be the point of control for structure. Nope, not at all, not a chance. Might be the point of control for this structure, for where we recently are before. Yes, all right, so this was our prior higher time frame low for the beginning of 2019. We made a new low, and now I'd say that this is a more reasonable range, and that makes more sense. Okay, this, yes, again, being the 0.6 of the fib between low and between high, between 0.5 and 0.6 fib, and this is the point of control for this structure. Let's see if it actually maintains that if I drag it before that happened. Yeah, so you're looking at, so before this even painted, just looking at the volume profile for this new range down here, all right, this is the point of control. Okay, and where this goes from here, you know, if this approaches the high again, also, so the great thing about this range right now, and there's no guarantee that it's going to work out this way, is that this is a really clear range, right? We have a really clear idea, rather, of where the high is. Ooh, now we definitely do. Really clear idea of where the high is up here, okay? Just keeping this loose, right? Understanding that any breakout of this high, I'm buying this retest, okay? Hands down, buying this retest. Now, you don't want to see it break like this and then come back down immediately. What you would want to see is that it puts in some type of flag above this, some type of structure, so that, let's say, just use this as an example. So if it comes up here, it makes a move up, an effort up, flags maybe. Okay, doesn't get rejected like that. Put it that way. You don't want it to see. You don't want to see that it comes up in this range and then is right back below. You want to see that it's forming some type of structure, and then I would absolutely be willing to blindly step in front of it if it comes back down to the top side of this range. And I'd be looking to enter in at the high, the uppermost wick that creates the top of the range, rather than any of these lows, because odds are that this could very easily make such a bullish move out that all it does is come back down to here, all right, which leaves this entire gap before continuing upward, right, continuing all the way over to here. Okay, so this is not necessarily what's bound to happen, but it's a very clear high that we have going on over here. Okay, whereas the lows, we've made a new area, okay, compared to where we were prior. So previously this was the low, and this looked like, again, see, this is a failed head and shoulders. All right, so shoulder, head, shoulder. All right, but there's no breakout of this, ends up just failing. Okay, and it leaves us with something that, here I go saying okay again, looks like a head and shoulders with a bigger right shoulder. All right, so again, you can't, this can very well, this right here could have very well been more attractive from a clean standpoint than this, but these two, right, can resolve completely differently. This can be the true head and shoulders, right? So that's why it's like you should never just look at patterns as if you're trying to find them the way they're drawn in the textbook. You have to understand the idea behind them, what they say about buyers and sellers within them. XRP, getting ready for new lows. No, seriously though, I think XRP is going to make new lows. All right, I think that they really shot themselves in the foot. I think that by trying to create stock and IPO, and the fact that they're, I think, likely still going to try to IPO and be a publicly traded company, I think that just shot them in the foot, because anyone who was buying XRP was looking at it as if they're owning equity in something, in the future of something, and that XRP is extremely fast. I was just talking to Josh about this. It's extremely fast. Before my mouse button even gets a chance to pop back up, it's already on the other side of wherever the network is, right? Wherever I'm sending it. I've used it a few times before to get money in places lightning fast when there was enough liquidity. But that's the problem. Like, if you're moving a ton of Bitcoin and you're moving a lot of money, well, depending on how thick or thin the book is, you could lose a lot of it, right? If you're getting into XRP and you're on an exchange where it's not as liquid, even though XRP is a heavily traded pair, it's not as liquid as Bitcoin, so you're going to lose some off the top, right? So XRP, I think, is going to make new lows. And I don't think there's anything wrong with saying that. It was rejected again, and if we just look at this structure, let's say that this is a deviation out of this structure. All right, so let's say this is the range high over here. Rejected again, clearly at the range high. Here's the midpoint of your range. All right, and right now it's favoring range lows, and the move that it made off of the range low is limp. All right, so I'd expect it to come back down here again, and you know what, this might represent a good buying opportunity. Swing failure pattern here on the higher time frame, break below this low, close back under it. Let's say you get something like that where you're back below this low and then you put in some type of bullish structure high, and then you're back above that high. Well, then yeah, maybe a trade to the midpoint of the range exists. Okay, let's see. And I don't have any problem with anyone maybe doing more research than I would do, and having a good reason to be in something. And I don't want anyone to confuse when I'm joking around on Twitter for me making fun of anybody who's involved in anything as if I haven't been in the wrong things before. I never want to come across like that, like an asshole or anything. I joke around all the time. It's just who I am. I'm maybe a stereotypical New Yorker in that fashion, although many people have said that I don't sound like a New Yorker. We bust each other's chops a lot, and I'm just used to that. It's sort of the relationship that I've had with my family too, an Italian and Greek family, and so I'm kind of outspoken in that regard, and I don't want to hurt anyone's feelings. I would be more than happy if XRP went to the moon. If XRP starts going north instead of south, and for example breaks it back above this low, so let's say XRP comes back above this area, just in general. All right, if XRP is back above 36 cents, for example, just rough estimate, then yeah, I'll be a buyer. I'm just saying what I'm saying by this, just to clarify. I'm not talking any specific prices. I'm saying that XRP has been doing this now for quite some time. All right, the idea is it's losing structure to the downside. If it starts showing that it has strength, all right, when something on a chart shows that it has strength, it means that people are interested in buying it. When people are interested in buying something, I want to own some of that. All right, I want to own it before other people, and that's where the difference is with traders and investors. Traders who are doing fundamental analysis, they're thinking, all right, I know something other people don't, and it's not reflected on the chart yet. All right, I'm thinking as a trader, well, I'm paying attention to what the chart is saying, and the chart will show signs early, but I'm not getting in until the chart shows some signs. All right, because I'm not taking anything on just fundamental value alone. All these ideas are fantastic. If anyone is new to crypto, back in 2017 and 2018, every idea could have been put on the blockchain. It was, you could hear an idea and say, you could hear an idea for any one of these altcoins and say, wow, that's an incredible business idea, before putting any thought into it, right? Because you're all kind of wrapped up in making money and the euphoria of the moment, that everything sounded like a great idea. Yes, that's an incredible idea. Create a blockchain for poets because they need to own the rights to their poetry and make sure that they were immutable and all these things, right? Just using, I think that's Poe as an example. And you could have seen the basis for any reasoning behind that, right? But it's just that no one's interested in buying it yet. And the market is telling one story and we're telling another. So I think that I just want to make sure, let's see if there's anything else I could cover. All right, so Cardano is right now at the top side of a range. Okay, might be an opportunity to get a little long Cardano right here. Okay, at least we could define our risk within the midpoint of this range. Ideally, you wouldn't want to see Cardano break down below this range again. So maybe putting a little long on Cardano here, or, and this is not advice, but maybe or just right here. So if we look at the fact that right now it's losing market structure, it lost this low. Now here's a high. So maybe we could meet somewhere in the middle and say that if we stop continuing to make a low and we start maybe putting in bullish market structure up, that this is a good long opportunity, maybe back towards the highs. And this is probably, the problem is you're not going to see assets really move on their own in crypto. You're going to see that either they're going to be in a position to do well and Bitcoin is going to stay stable or do well, and then they will do well, or there will be the best technical setup available for an altcoin, and all it needs is a little bit more bullish market structure, and Bitcoin craps the bed, and then there's no chance because that alt just dropped 20% and it lost that structure. Okay, so you might see something like an alt do something like this, okay, where maybe it is, maybe here's a midpoint level and maybe the alt was ranging for a while and now it's back down to a key level of support. Maybe this is a range high and you're saying, all right, well now it's approaching this level, okay, and Bitcoin is moving sideways. So if Bitcoin's moving sideways or moving up, I would be willing to get behind this trade, all right, because it's starting to look like at this point, maybe it's making a move back up, all right. Now, if Bitcoin starts crapping the bed and alts are a hair away from being within bullish market structure, you won't see that. You'll see that alts might be putting in bullish market structure. Bitcoin drops 10%, alts drop 20. All right, and they pretty much just wipe the drawing board clean. EOS, here I said that. I was about to say ETH, and then I said EOS, and I just made a hybrid word. All of these, though, let's see. Let's take off the automatic scaling tool. No, well, this is back within a prior low, all right, and this is ETH Classic, and it put quite a big move, but so far we have quite a large retracement. I think I drank too much coffee, but if we're back above this high now, all right, so you see you have a low, you have a high, low, high. If we're able to get back above this high, above 10,000 or 101,000 sats, you're probably coming up to test this high again. Okay, and let's look at that on, actually I don't have the USD chart for that right now. Went over that. An example of how market structure is respected. Hedera hash graph, insane move. All right, good for Josh, not good for me because I was going to buy it with him a long time ago and I opted not to. And because I like to see some type of chart. This came back down to this previous area of market structure and respected the top side of it. So anytime you see that price has made a range, even if it's had a really heavy breakdown, when you have a huge markup like this, expect a retracement and a bounce at the prior range high. All right, don't be buying up here. Okay, it's gonna come back down here one time or another. If it's up here, you might have lost it, unless we're in a new market and a new retail influx is in the way and Bitcoin has just made a new all-time high. The only time I'm going to be chasing alts will likely be when Bitcoin breaks a new all-time high, and that's because if there are a bunch of people coming into the market, you'll be able to get away with something like that. All right, Ravencoin just probably bouncing to infinity, making lower highs. If at any point we break this pattern, this might lead to a good setup, but I don't think it's going to do that. I think these two were kind of anomalies, and people are, this one is pumped out, I think, for quite some time. Let's look at total market cap, and this is not indexed, though, so it's not proper weighting, but just looking at the market cap as a whole, there are a lot more coins in this right now. Still above, well, not necessarily above, but prior range lows, that range high. We're coming in contact with this area. If this starts to make a move back upward, at that point you'll likely know because Bitcoin would be already. But this was bullish. The fact that we came this high, there's good reason to be really confident for the market as a whole. All right, it's faked us out a lot of times, but the halving is right around the corner. I think this pretty much does it. I hope I didn't do this too long. I wonder how much time this. Oh my God, I wonder how long this video was. I said the time in the beginning. I just don't remember exactly when that was. I think, let's see, my wife called me, interrupted the last one, 12:35. So this is about an hour long. And I think that pretty much does it. Let's just look at traditional markets really quick. All right, so the market is getting behind the fact that Biden is doing really well. Okay. Let's look at gold. Everything putting in a really nice bounce. Now, there's a lot of panic in the market, and for good reason. You know, there's still a large kind of gap in what we know with regards to the coronavirus. And if we have an idea of how many people are actually carrying it, it'll probably calm people down a little bit more, because right now the death rate is a reflection of what we know as far as who has it compared to who's died from it. And obviously the dead people are going to turn up a lot faster than the people that are holding it, right? So you really can't hide it when you're dead. So it's still a large unknown, and supply chains are interrupted. Schools are being shut down. Businesses are not being as frequently visited as they were prior to this, obviously. You know, just think about how you might be changing your own behaviors. And that has a lasting impact. And that's going to be a ripple that will likely be felt for, you know, at least if this gets better within the next, you know, month or two, that's one thing. But if this is like a 6-month long, drawn out effort to contain this until there's warmer weather for the areas where it is still pretty dense, or rather where now it is just starting to populate, meaning some areas in the United States, and apparently warm weather sort of helps this problem go away. If we have to wait that long and businesses are changing because of this, well, then there'll be a ripple to be felt for a little while, right? I mean, it'll take some time to recover, but it can't be as bad as getting the actual sickness and having to deal with being in a life or death situation for some people, like the elderly or maybe the ones that have weaker immune systems. And this just makes all hospitals that are already experiencing maybe stress and having to deal with normal issues, it just puts them under much more pressure. And it's there's only a certain amount of energy to go around, right, to borrow from. And all we're doing is by having a panic like this and needing to respond to it is creating more pressure on already overworked healthcare employees, right? So you just have to think about how everything is connected, okay? So that's that, all right? Markets right now experiencing a reasonable bounce, although this was to be expected. If anything, I would expect the market to do something like it is doing, where it is, you know, bouncing, and to have a pretty violent next month or two, okay? And you can see that this is how bottoms form when we're looking at something like the ES or looking at the S&P. It's never just, I don't think you get a V-shaped reversal off of something like this. All right, it's not just a matter of like, whoof, wipe our foreheads and everything's okay. There are actual companies that are suffering from this, and it's going to change their forecast for their 2020 outlook, 2021 outlook, and there are real ramifications from something like this. So that's that, guys. All right, everyone have a fantastic evening. If you have any questions, let me know.